Hey traders, welcome to Charts and Coffee. Hope everyone is doing great. Happy Thursday, everybody. We've got a lot of interesting things on the calendar today. So if you haven't checked out the calendar yet, scroll on down. This is forexfactory.com, by the way. Scroll on down to our Thursday, Jan 5th list, and you will see today, 8:15, we already had non-farm payroll. Now, you'll see a giant candle at the 8:15 mark on the indices. And I do want to note that we were already coming off some resistance. So I think a lot of times we can say, oh, this data sent the indices lower or sent the euro higher or the dollar lower or whatnot. We had some pretty persistent resistance before that data came out. And right there, that large candle, there's your 8:15 ADP. The only thing that matters is, look, do I care that we came in at 235,000 versus 152 and that the previous number was revised upward significantly? I really don't. ADP is not necessarily foreshadowing what we're going to see tomorrow in non-farm, but what it does remind us is that good news. What's good news? In this case, more jobs, right? I would think that's good. Good for people who are looking for jobs, good for the economy. But good news is not bullish for the market. Let's see. The bots reminded me that Bostic, Bullard are speaking. Esther George already spoke. So we do have quite a bit of Fed speak peppered throughout the day. And you'll notice that we don't really see the Fed speakers here. So another calendar that I would recommend is over here at tradingeconomics.com. This is the second calendar that I'll look at. There's three calendars that I will look at depending on what it is I'm looking for. The general calendar, the non-negotiable, forexfactory.com. The second calendar, looking more for some of the more minor Fed speaking events. Here's Bostic at 9:20. You'll see these listed oftentimes. Here's Bullard at 1:20 on Trading Economics. The third calendar I use during earnings season, and we're coming into earnings season, is the earnings calendar over at Estimize, ESTIMIZE.com. And I love this one for the fact that it can give us the best insight into whisper numbers. What is the expectation I have about a specific uh, release, a hot zone, an earnings release. And it also lets me, as you can see here on the left, and we'll get into this more as we get closer and closer to earnings season. You'll see here, we have some earnings. I mean, we're already getting right into the financials window. And a lot of folks ask, Rob, when would you look at setting up, say, JP Morgan, Citi, some of these financials that are being released, Wells Fargo, Goldman, Merrill. When would you set these up? At least 1 month before the release. So this is not something with a 113 release that I'm going to think about today on the 5th, it's basically 7-8 days away. What I'm going to be thinking about is that release and the structure of the market 4 to 6 weeks out. So unless I've got this 4 to 6 week kind of list where I can say, hey, if today is the 5th, what am I thinking about in terms of setups for hot zones with earnings? I'm going to scroll out to what's being released the beginning of February. I'm going to start looking at releases for the 3rd, the 4th, the 5th. So this is where Amazon, Amgen, Apple, Starbucks, Disney, this is the window for those hot zones if I want to play that run up or that movement before the earnings release. I do not play the volatility of earnings. I do not play inside that 48-hour window. I like to really back away around 2 weeks before earnings, ideally. Anyway, that's what's going on this morning in terms of the hot zones we've got. And keep in mind the hot zones for the earnings season that we are just really just right up into. Okay, gang. So questions, as always, best part of the show. Let's jump on into them. And the first question is, editor asked, do I think tech will continue to get Donkey Konged in 2023? It depends on what symbol we're looking at. I would never just kind of say all of tech, right? There's so many ways to look at tech. There's three sectors within the NASDAQ: XLK, XLC, XLY. I can also look at semiconductors, cloud computing, cybersecurity. So I don't want to paint them all with the same brush. That would probably be rather ineffective. Yes. Now, I'm not, I mean, 2023, that's 12 months, right? I have no idea. I'm never going to, I don't know what I'm going to have for dinner Saturday night. There's no way I'm going to be able to say what I think is going to happen for the next 12 months in tech. However, even better is we can measure it, right? We're always going to measure. So that means, is the NASDAQ still in a downtrend, right? It's actually not. It's no longer in a downtrend. Is XLK still in a downtrend? It's actually no longer in a downtrend. So the first step to getting out of a downtrend is, are we going neutral? The second step is, if we're neutral, is to find the ranges, to your point, kind of going back and forth. To me, Donkey Kong is getting hammered, right? It's just going lower and lower and lower. So that would probably be specific, and this is where it's so important. That would be specific to XLY, and the cause of that is Amazon in a downtrend, Tesla in a downtrend. Yes. So remember, Amazon and Tesla are your number one and number two weighted stocks in that XLY. Hence, that's where, you're looking for weakness. That's where I would look. All right. And then we'll just continue to reevaluate, because that's our job as traders. I know that it does seem from time to time, a lot of traders want to focus on prognosticating. This is what's going to happen 3 months, 6 months, 12 months from now. I've never known how to do that. I don't know what crystal ball they have at home, but it's not one that I've ever owned. I know that for me, it's continue to assess and reassess, and then assess some more, and just continue to monitor what I have, and trade what I see on the chart. So thanks for the question. All right, next up, what sectors of the SPY am I bullish on? Is this a market where it's wise to be bullish and directional at all? Oh gosh, yeah, two great questions there, Ben. So first of all, SPY, I'm not super enthused about the SPY. It's too tied to the NAS. I'm much more excited about what I see on the Dow. There are some components of the Dow and the S&P share, and that's going to land squarely here in healthcare. So I would say healthcare and some of the higher trending stocks in the XLV healthcare ETF. That would be the first part of the question. The second part is this a market where it's wise to be bullish and directional? I'll tell you, Ben, I am wandering into some of these directional trades where we have either a Darvis support level with stochastic or V-score support confirmation that I can build options positions into. We do a lot of ETF and stock options trading. In fact, that's the bulk of what we do in the Sector Secrets Mastery. I know a lot of you signed up for that over the holiday special. So very cool to welcome a lot of you brand new to the Sector Fu room. Yes, we do Kung Fu Sector Fu in the Sector Secrets Mastery. And so then, is it wise? I ask myself that, Ben. I'm asking myself that a lot. My issue is not the structure of the market. My issue is not whether or not, say, for example, AbbVie is in an uptrend. It is. My question is the concern: how much follow through am I going to get? So yes, but I think more prudent initial targets and being a little bit quicker to a break even is going to be absolutely the way that I'll have to operate through this stage of the year. All right, that's what I'm looking at there. Okay, next up, any opinion on Disney? It's still in a downtrend. So that's the first thing. Structure dictates, well, everything. Think about it this way, gang. Structure dictates strategy, and strategy dictates the indicators that we're going to ultimately use. So for me, my opinion on Disney is this is still a short, still well below the 200, still exhausting within the wave when we are red for the most part. So I would look for a short on Disney. All right, next up, how do I go about deciding when it's time to swing trade again and when to press pause? Martha, I'm already swing trading. We've got a select number of setups that we looked at yesterday in the Sector Secrets Mastery. And so I am readying to do that, but they're not near levels that we would trigger just yet. We have about, I think we set up about a half dozen setups in the room. There we go. We have about a half dozen setups that we looked at, and then I'm going to slowly, probably today and tomorrow, send those out as alerts. But they're nowhere near levels that we really need to be concerned about. Although we'll probably talk about them today and start to send those out. So if you've been following along with the notes from the Sector Secrets Master, you know exactly what I'm looking at and where we are looking to engage some of these trends. And for the most part, we are focusing on the trends. We are focusing on the uptrends or neutral bullish long calls at support. All right, next up is Coke. Wiley, I like Coke a lot, and let me show you why. Kind of going back to Martha's question, which is, let me show you the XLP. All right, here we go. So XLP is not in an uptrend, right? But it is fadeable, meaning I could fade buy it when it's oversold. If you don't know how to do that, use the Darvis, use a slow stochastic. It's fantastic. It works. It's something I've been doing in combination like that for over 20 years. Just a really clean way to find a price level and then a confirmation that that price level could be support or resistance. Because we're above the 200, because the trend that preceded the current chop was up, I'm going to be bullish neutral. All right, but what's just straight up bullish here? Procter and Gamble, Philip Morris, right? Look at these. Look at the 4 double greens here, and that's where I want to be focusing, and that's where an individual boat might be better than the tide. Now, where does Coke fall into that? Probably in third spot, tied with Mondelez. So after I've exhausted potential opportunities in the green trends, I'll then go to the yellow trends like Coke and Mondelez. So it's just a few notches below my preference to find better structure as the reason for the entry. All right. So I like Coke, but not as much as the other 4. But it would definitely be in that next tier of potential bullish plays. All right. Next up is, what are my thoughts on TLT? Well, ZB is continuing to chop around. I'm bullish on ZB. We just, in a neutral environment, had a stochastic bottom out at that low level, that 20 reading of a slow stochastic. There's 3 levels that are really important on a slow stochastic. Slow stochastics are absolutely fantastic. They're built into most platforms. You can get this, to run on your screen in just a few clicks. TOS, TradingView. I'm on TOS here. So what you want to do is have a 21K 3D slow stochastic. You want the 80 and the 20. Some platforms will let you put that midline 50, which is pretty classic slow stochastic play. Slow stochastic is interesting. It's a combination in many ways of an exhaustion tool and a momentum tool. And I'm trying to find my drawing tools so I can show you what I mean. All right, here we go. So here we have the 80. This is the high. This is, in many ways, you can view this as resistance. As long as we're neutral, right? Yellow trend. This is where a slow stochastic is really going to shine. Please don't use stochastics and trends. They're not going to be as helpful. The lower end is the 20. That could be the low. That's also support. Okay. When we're in a neutral environment, you want to look at where, not just the slow stow. Don't let a secret squiggle get you in and out of the market. That's just not smart. Combine resistance levels on the price chart with a confirmation on the secret squiggle. And that's what I would look at there. So ZB, with that in mind, there it is. Okay. And that's what I'm looking at back and forth. And ZB, that's what's going to track to whatever I may or may not do in the TLT, right? So ZB tracks to TLT. All right. Okay. Next up, Martha asked, what I was asking was, I took a pause of swings, right, this summer. So I was wondering when you know not to tell. When do I know not to? Structure is going to be most of the reason I'll change my mind. This summer, we didn't have really, we went across the different, let's see. Let's see what we have here. Yeah, if I look at the charts over summer and we start looking at the structure, it was a lot of chop, right? May, June, July. In fact, we had a little bit of weakness into May where I was bearish. And then once we went back to neutral and once we started seeing more volume derived support, look, gang, a lot of you know, come July of this past year, I really stopped on the broader averages being bearish. It's just I have to be more selectively bullish off setups that would give us an ability to manage risk because we have yet to really test. Take a look. How many times have we been near a -3 standard deviation and just won't go below that? We tend to exhaust around a -2.5 standard deviation, which is to say volume is telling us where size is coming in. And if size is coming in and we're not breaking down to lower lows, the opposite side of that is we're then finding support based on buyers. What is support? It's bidders, it's buyers. What are buyers? They're demand. It's really simple, right? Support is demand, demand is coming from buyers. So as long as I can continue to see that, I didn't want to be bearish. We had a lot of chop through summer, and now as we go into 2023, partly the reason that I'm starting to look for opportunities on the daily for swings is because the trends are back. If the trends disappear again, I'll make that same adjustment. All right. So next up is, let's see. Oh, thanks, Sister Walker. I appreciate that. No, I appreciate that very much. All right. What do we have here in the free room? Can we take a look at Apple? Sure. All right. So if I'm taking a look at Apple, now Apple does have a downtrend, right? Apple transitioned into a downtrend, gang. It's been in a downtrend back in October. It's actually re-embraced one as we wound down December. And, my general rule is I can't buy a downtrend. Now, does that mean I can't look at the weekly, which is still neutral, and see if there may not be an opportunity to get long? My focus on Apple is going to be a lot of what we did over summer. Back to the other question that Martha had. And that is, and some of the commentary that I'm making is what did I do in the mastery, right? What do we do in terms of managing that summer action? We day traded a lot. Yesterday we had bought, how many day trades we have yesterday? Four day trades. So we're day trading a lot, very actively every morning. We were done by 10:35. That's the soft cutoff. And then we manage whatever open trades we had. So the day trading continues to be really, really great. And that's where, in terms of Apple caught, what I would look at, to your question, is the weekly, and I would continue every morning to look for day trades. And the weekly could be interesting. I don't think it's quite got my attention at levels yet, although it's getting really close. I need a pattern to confirm, and this would be a buy, by the way. And then intraday, well, intraday is going to give us a lot of different looks. And so this is where, if I want longer term, weekly, and I'm bullish, and if I want to be really more nimble, and to some of your point, hey, Rob, we don't know what's happening next. Neither do I, right? And I'm not going to pretend like I do. But the day trading frees us up to say, you know what? We're going to trade this very specific window of the day, get flat, and start with a blank page, fresh eyes the next day. And that's been working really, really well for, over 7 months now. And so that's the way I'll look at Apple. That's the way I'm going to process what's happening there. Stacy, I appreciate that. Hit that like button before you leave. No, I appreciate that very much. All right, gang. And just like that, our show is wrapping up. Thank you as always for being a part of the Charts and Coffee Caffeinate and Dominate crew. This is my first cup of coffee, not even halfway through. So just warm it up. All right, gang. Thanks as always. Thanks for being a part of the community. I'll see you tomorrow. Same time, same station. Be good to each other.